Hello everyone, welcome back. Today we're going to talk about the latest movements in the foreign exchange market and what to watch out for this week. Yesterday, the dollar index closed at 105.69, slightly lower than last Friday's 105.87. It's been a quiet start to the new quarter in the forex market, but the dollar hasn't been performing well. This week, all eyes are on Friday's non-farm payroll data. If the data is weak, it could cause the dollar to weaken further. Recently, the US presidential debate reminded us that the election can bring a lot of volatility. Right now, the polls show that Trump is leading Biden, and Trump's stronger performance might boost the dollar. At the beginning of the week, the US ISM manufacturing PMI for June was a bit disappointing. Despite this, the dollar strengthened due to rising US Treasury yields. The cautious stance of Federal Reserve officials also supports the dollar in short term. Since July last year, the Fed has kept its policy rate between 5.25% and 5.5%. They've said they won't cut rates cuts until they're sure inflation is on track to their 2% target. From a technical perspective, the dollar index remains positive. The 14-day RSI is above 60 and the MACD shows a stable trend. The dollar index is above the 20, 100, and 200-day moving averages and continues to trade near the recent high, with the 106.5 and 106 levels in sight. However, keep an eye on the 105.5 and 105 levels for any potential declines. The WTI crude oil prices have been climbing due to the increased US oil demand during peak summer travel season. The American Automobile Association predicts a 5.2% increase in travel this year, with car travel alone expected to grow by 4.8%. Recent US inflation data has raised expectations of a Federal Reserve rate cuts in 2024, pushing the oil prices higher. On Tuesday, the WTI crude oil traded around $83.4. Renewed concerns about geopolitical risks in the Middle East and expectations of higher summer fuel demand are also supporting WTI oil prices. Tensions between Israel and Hezbollah in Lebanon have oil traders worried about potential disruptions in the global oil supplies. The oil traders are increasing their long positions, anticipating short-term gains. The strong summer driving demand and recent data showing high US petroleum product production and demand in April are also factors. WTI oil prices surged $2 per barrel at the start of the week, breaking through technical resistance level around $82 and reaching a 9-week high near $83. Since early June, prices have risen by nearly 15%, climbing from around $72.5 to over $83. The WTI oil prices are poised to close higher for the fourth consecutive week, aiming for levels around $84.14 and potentially reaching $85. However, a pullback could see prices retesting support levels at $82.56 and potentially down to $80. And lastly, for our gold prices, saw a decline during the North American session as traders reacted to comments from the Fed Reserve Chairman at the ECB forum. Powell's slightly dovish tone and firm US Treasury yields influenced the market sentiment. As of now, the gold is trading around $2,329. It's expected to continue its recent upward trend during the Asian session on Tuesday. Despite strong momentum, gold buyers faced challenges as the US dollar recovered from losses and USD Japan yen rallied, pushing the dollar higher towards the 162 mark. The recent rise in gold prices was partly due to profit-taking in US Treasury yields ahead of major US events. However, the dollar's strength and mixed US economic data like the ISM manufacturing PMI tempered gold gains. Looking at the daily chart, the 14-day RSI stands at 48.7, showing bullish sentiment. The gold closed above the 75-day simple moving average of 2,321.5 earlier this week. To resume upward momentum, the gold prices need to close above key resistance levels like the 60-day MA at 2,341.5 and 2,347.5, which is the 23.6% Fibonacci retracement level. The psychological barrier of $2,350 and recent high near 2,368.7 could be next targets. On the downside, the 75-day MA now acts as support at 2,321.5. If broken, the gold might test recent lows around 2,319.2. Further declines could target the 2,300 level and potentially the support area near $2,292. And that is the end for today's daily analysis. Thank you for watching and happy trading.